Welcome to a new analysis of Tradomics focused on USA indexes. As of by now, we're going to have a look at the main US indexes, among which Nasdaq, Standard& and Poor's, Dow Jones, and Russell 2000, in order to make the point of the situation and plan how to better do our tradings on stocks. So if you haven't done it yet, I suggest you to subscribe to the channel because you can get a notification as soon as possible once our analyses are issued, so you can be up to date regarding the analysis, as this is a cycle analysis and takes into consideration one of the most important parameter, which is time. It's better to be aware of the risk and the opportunities that the market reveals as soon as possible. Having said that, let's start with Nasdaq 100. So, according to the last analysis that we issued, we were saying that from this low, there was the development of a T that was turned into a negative cycle, and therefore we could have continued the downtrend until a minimum, medium, and maximum duration. So, regarding the duration here, we have had 6 bars, and I was flagging the possibility also to continue the downtrend because we were really at the extreme minimum duration of the weekly cycle, and therefore, statistically speaking, we could have had more possibility to go to the downside rather than having a bounce back to the upside. Actually, we had one possibility to return to the upside versus 5 other possibilities to basically continue the downtrend. But 1 out of 5, which means 20%. Here we had the 20% possibility. So we have had something like a homing pigeon reversal, and then we started to bounce back to the upside. So basically, the time was enough because we had 6 days, and here the minimum time is 6 days to complete the weekly cycle and then starting something new. Okay, so here I remove the arrow, and let's now understand what happened. So if we gauge the total duration in terms of the downward cycle from this T plus 3, here we have 23 bars. So basically this downward cycle is a T plus 1 hybrid cycle, 23 bars, so 2 weeks cycle. Now we have to understand from this swing or this candle what has happened. First of all, I put a T plus 1 here, and now if we gauge now the other durations is that from this low to this low we have 17 bars. So this is another T plus 1, but we also have the possibility to close not just a T plus 1 but a T plus 2. We have 40 bars. So now we don't have enough so we don't have enough time to have another weekly cycle, and therefore here we have high possibilities to develop the T plus 2. It's not given by fact that we can have a T plus 2 because we might also have another T plus 1 and then return to the downside here and close eventually a T plus 3. But this T plus 2 eventually will turn into a T plus 2 if we go up above this high at 20,273. Okay, so here now we have to monitor carefully for the next week what is going to happen in terms of um, rising. So if we're going to go here over this top, then we're going to have a T plus 2 from the downward cycle. At the moment, we cannot know it. So therefore, I put a T plus something, and then next week will be crucial to reveal the future trend. I also, for a matter of completeness, I added also the weekly cycle, first weekly cycle and second weekly cycle. You can always check the duration. The first weekly cycle lasted 8 days, and the second weekly cycle lasted 9 days, and also I've done the same for the upward cycles. So the first weekly upward cycles was this one, the second one was this one, and the third one was this one. So the first one was negative, then we turn into a positive one. You see that whenever there is a turn into a positive, then the cycle can push to the upside or push in the direction of where the breaks, where the break occur. And here we had 8 days, and similar also to the second upward cycle. Here we had 7 days or 7 bars. Now, the most interesting part of the analysis is the following. I said also during the last analysis that here we could have had the T plus 2, and in order to develop a T plus 2 we need a certain retracement percentage and some certain number of bars below a top in order to develop the cycle. And here what happened is that we had this T plus 2, but now if we gauge the total duration from this top to this top, here we have 24 bars, which means that we have the minimum duration also to close what? To close another T plus 2, like this. So given that this cycle has turned into a positive one, what we can have is either from here we start T plus 2 with a minimum duration of minimum time duration, or we can have a T plus 1 or a T and return to the absolute tops. So either we have this or we start having something different, which is the beginning not of a T plus 2, but the beginning of a T plus 3, because now we have 55 bars. Okay, so what is important to keep monitor next week is two price levels. The first one is, as said, the price level here at 20,273. So if we return back to the stop here, we're going to have a T plus 2. And here, potentially, we're going to have another T plus 2 upward cycle that turns into a positive one. And therefore, the next target will be the all-time high. But in case we will start losing power, or we will start a more consistent downtrend, the second candle that we need to keep monitor, or the second level, is the level at 19,622. So if we start going back and below this level, then we're going to have a T plus something. At the moment is a T plus 1 that will turn into a negative one, and we can proceed to the downtrend for a minimum duration of a T plus 1. At the moment, I say T plus 1 because at the moment we have 1, 2, 3, 4 bars above this minimum, and therefore we can proceed the downtrend until a minimum duration of a T plus 1, 13 to 22 bars. Now, this is something that has not happened yet. So at the moment, we don't have particular indication from the market, but we have to carefully monitor this high and this low to better understand the future direction of the price. Having said that, now we can move to Standard & Poor's 500. For the Standard & Poor's 500, we have pretty much a similar situation. So also in this case, I was flagging the possibility to have more time for the downtrend, but also in this case we have the completion of the weekly negative downward cycles after 6 bars. So same situation as for the Nasdaq. On this low, we started at T plus 1 downward cycle, and duration from the low signing it as a T plus 3, we have 23 bars. Now, also in this case, we had the first weekly downward cycle and the second weekly downward cycle. And now here, potentially from the candle that we had on the Wednesday, 2nd of October, we have potentially the T plus 1. Potentially the T plus 1 because we have not so many bars now, not the sufficient bars to say this is a T plus 1. But we can bear it in the back of our mind. The second interesting thing is that, so here from this top or this top, we have the beginning of a T plus 2. I would keep this top, so 30th of August 2024 as the beginning of the T plus 2, but we can also take this one for a more conservative approach. Conservative approach means that from this top to here we have 22 bars. Therefore, here we don't have enough time to finish a T plus 2. This means that we will return back to at least this top to complete the T plus 2, because now 22 bars are not enough. And if we drag the duration until yesterday, we have 29 bars. So here we will need to return to this absolute top at 5,767 in order to complete the duration of the T plus 2. Okay, so here, as opposite to the Nasdaq, we expect to return to the all-time high, and therefore here I can put the arrow in green like this. Okay, so here compared to the Nasdaq on Standard & Poor's, we have more strength because the retracement here was definitely lower compared to the retracement that we had on Nasdaq, and actually the distance between this low and the moving average 200 period is definitely more compared to what happened to the Nasdaq 500. And the second thing is that from this top here we have just let's gauge better from this top to the candle where the top was broken. Here we have 46 bars. So here on the Standard & Poor's, we keep climbing and we are breaking the former tops, which is something that on the Nasdaq is not happening at the moment. So now here we can say that this is a T plus 3, definitely, but it's also what? It's also T plus 4, because we have had the break of the absolute tops after just 46 bar. Is that a T plus 5? It's not really a T plus 5 because we would have needed at least the 2 bars in order to have a T plus 5. And if you imagine that this was a T plus 5 and we broke up the cycle after just 47, 48 bar, we could have had more than 130 days to extend the rally. But that's not didn't happen. But instead we have a T plus 3, a T plus 4. So what is going to happen is that from a conservative perspective, for the T plus 3, now we have 53 days. So when we will return by next week up to the absolute tops, then you would need to be a little bit careful because the time for a T plus 3 would be in place, and therefore we might expect also a retracement. Okay, but of course we can also proceed to the upside up to maximum duration. This would be the best case scenario. So therefore the maximum duration would be extend the rally until 18th of November 2024. Considering that this is also a T plus 4, then the rally can be extended definitely after or beyond 2024 and 2025. But conservative speaking, so we have to start being aware that after the next week, where we have a high likelihood to return to the absolute tops, we will have enough time to start a retracement for a T plus 3 3-month cycle, or at least a T plus 2 So because here we have 53 bars, and the T+2 is, if we return back to the tops within the next week, we will have 31 bars. Okay, so it's just that you have to be aware of eventual risk that we can have by next week or end of next week. We can also consider this T the potential beginning of a T+2. In that case, we'll have first to return to the absolute tops, and then we will have a certain number of bars above this low to begin the T+2. So in that case, this will protect us for the entire next week or even the week after for eventual unexpected retracement. But you have to keep in mind that time now is suggesting that we can have, from not from next week, but from in 2 weeks time, a potential retracement. So that is what you need to be aware of regarding the Standard & Poor's 500. So let's move to the next one, which is the Dow Jones. On the Dow Jones 30, what happened is that for this cycle here, -1, rather than having a downtrend for 6 days, we had a downtrend for, thanks to the candle made on the 10th of September, we had a downtrend of 9 days. Therefore, here we can remove the arrows. And regarding the time between the lows, here we had 26 bars. So here we definitely have the possibility, or we had really a T+2 now for the Dow Jones, something that didn't happen for Nasdaq and Standard & Poor's. Now, regarding the upward cycles, here we had a similar situation as for the Standard & Poor's. So we had 20 bars. So from this top here, we can put a T+1, but here we don't have enough time for a T+2. So therefore, it's highly probable that we will return back to the absolute tops, even if remember and keep it and bear in mind that from desktop to desktop, we have also enough time, 50 bars for a T+3. Now, it seems that at the moment we don't have a really harsh retracement. So that's why I'm saying that here for the next week, I'm expecting to go over the stop at 42,628. But we can always have, and this would be something that can put the traders in a trap, which might be also bull trap, a T+2 plus a T+1, making a T+3. And here you might expect to return back to the tops, but they can also attach a T+1 with a T+2 and then start a T+3, because time-wise here we have all the conditions. But for experience, with this candle here, we might already go over the tops, because the retracement here was not so strong. For having a T+3, we should have gone below this level at 41,449. At the moment, it's not there yet. Of course, they might already revert all the things. It's just in a blink. So even on Monday. But here we have the most probable way to go forward. Okay, so expecting the closing of a T+2, and when we eventually will have the closing of the T+2 by potentially next week, then you need also to bear in mind that the T+2 will be completed, but also the T+3 will be completed. Okay, and therefore you have to be aware that potential harder retracement can happen. It's also true that here we have a T+3 or T plus. So here we have a T+3 now that is confirmed. And if we gauge the total duration from this T+4, here we have 133 bars. So we have already a minimum duration for a medium duration for a T plus 4, even if we can extend the duration until 168 bars, which means that we can extend the rally, excluding bear tongue, until 18th of November 2024. So here on the Dow Jones, we have a situation in which really the time is a little bit more advanced compared to the others, because here we have the T plus 4 and the T plus 3, even if compared to the others, we have a little bit more room to proceed to the upside, especially over the short term, which means next week. Okay, so that's the situation. Regarding also the duration of this T plus 4 downward cycle, here we have reached 117 bars, which is not even the median duration. So here we would have for the median duration another month, so by end of the month eventually to close the T plus 4. Okay, but be aware that after the return on to the tops, if we don't have a T plus 3 next week, then time will suggest us to be a little bit careful with long positions. Let's move to the next one, which is the Russell 2000. According to the last analysis that we issued on Russell 2000, here we were expecting eventually more downtrend to close this weekly cycle with a medium or even a maximum duration. So here we had, as for Dow Jones, 9 bars. So here the analysis was correct. And from this low, we can put a T plus 2. As here we close the first T plus 2 of this T plus 3 after 26 bar, and now we are on the second T plus 2. Regarding the upward cycles here, from the upward perspective, here we have 34 bars, so a T plus 2, it's also in development from the 18th of February 2024. What we can expect is then a return back to the absolute tops, because here we have a T plus 5 that is a positive cycle, and therefore we have time to extend the rally until up to the minimum duration, which is 190 days. So up to 27 of December 2024, and even beyond 2025, if they wanted to extend until medium and maximum duration. So here is just a matter of time to return to the absolute tops. Here we have the development of the T plus 2 upward cycle. Now, the thing is that according to this peak and then harsh retracement, this peak, harsh retracement, this peak, harsh retracement, here it seems that they are wearing out time rather than proceed to the rally to have more steady state situation, because after this exploit that we had between July 10th of July and 31st of July, here it seems that they are not really pushing hard for proceeding the rally, but rather they are using the time at their disposal and their, funds or HFT to have such a trend, which is basically no trend. It's more steady state situation. But in any case, we know, thanks to this methodology, that at a certain point in time, between 190 and 338 days from this stop, we will have to return back to $2,299. Okay. Let's gauge also the duration. Here we had 16 bars. So here we have potentially the beginning of a weekly cycle, as here we have 8 days plus this one. So let's see what we can have from this low. An important thing is that if we go below this low, or if we go below 2,173, we might have more downtrend, even if now we are about to close. So this was the first weekly upward cycle, and we are about to close a T+1 upward cycle. Okay, so given that from this top we add 5 days, what we can expect is to have for the beginning of next week more push to the upside to close this weekly upward cycle, because we had just 5 bars, and to close this T+1 upward cycle. And in order to close a T+1 upward cycle, we need a couple of days to the upside in order to have the sufficient condition to close the T+1. Okay, so also in this case, from the beginning of next week, I'm expecting more uptrend rather than downtrend, with a potential return over this T+2, and eventually the target, as said, will be $2,299. So that is all for all the main USA indexes. If you like the analysis and you deem that you have received useful insights, then you can put a like to support our daily job. And last but not least, if you wish to subscribe to our channel, you will get notified as soon as possible regarding our analysis on your stock of your interest. Thanks for watching, and see you to the next episode.